If you want to break into the world of banking and finance, hit the third link in the video description below to register your interest to sign up to my career accelerator. You're not going to want to miss it. Big opportunity to be part of an exciting community, which I'm currently building out. That's all I'm going to say on that. With that, let's get into today's video. All right, what is going on, people? Welcome back to another video. In this video, we're going to be going through a career guide of mine, not all of it because it's like 100 pages long. It's on investment banking, the investment banking division. We're going to touch on specifically a day in the life of an analyst, associate, vice president, director, managing director. So if that's of interest to you, let's get straight into it. The guide covers a lot of things. It's linked in the video description below. Product groups versus industry groups, salaries, bonuses, benefits, progression, titles and responsibilities, day in the life, positives of the career, negatives, challenges, qualifications, breaking in, exit opportunities, interview Q&As. You get the picture. There's a whole load of stuff. So yeah, first link in the video description. Anyway, with that, let's go to page 39 and let's get stuck in. All right, so typically a day in the life of an analyst in the investment banking division. Day in the life of an investment banking analyst can be long and challenging, but also exciting. So first things first, they typically wake up 8 a.m. And they start their day by checking their emails, checking their calendars to see what meetings or deadlines they have for the day. Analysts are going to be working on lots of different projects for, different members of their team. And so they're going to have lots of balls that they need to juggle. So every morning, check their calendars, see what's coming up, so they get a good idea of what to expect for the day, how to plan the day, how to approach the day. And then they'll travel into the office between 8 and 9 a.m. And in that time, they'll probably be catching up on news, looking at what's going on in the markets, looking at what's going on in the world that's relevant for the area that they're covering. So if they're covering like technology companies or pharmaceutical companies, then they're going to want to read like the Financial Times or whichever news outlet that is posting news about their specific industry. So pharmaceuticals or tech companies, etc. Get to the office and there's typically going to be team meetings or conference calls. These conference calls and morning meetings are going to be discussing the status of projects that they're working on. Remember, analysts are at the bottom of the food chain. Above them, there are associates, VPs, directors, etc. And all of them are going to be working on projects together. But the analyst is going to be doing the grunt work at the bottom, the research, the financial modeling, compiling data, all of that kind of stuff. So these meetings are going to be basically touch points to see how are projects coming along, what's the strategy, what needs to be delivered that day or in the next few days, etc. They might also meet with senior bankers to receive guidance or feedback on work that they've already done. So for example, if they've put together a financial model, they might meet with an associate or someone senior in order to discuss how that model looks, if any of the numbers need to be changed. When I say financial model, for those of you that don't know, a financial model is basically it's on Excel, Microsoft Excel, and it's basically a system or it's a model. How can I say? It's basically they create this thing on Excel that is going to be used to value a company, for example. And how they do that is like every public company in the world has their financial details on the internet. Yeah. So you can go on, let's say, Apple, you can go on Apple's website, or you can go online and find Apple's financial details. You take the financial details for the previous years of Apple and you plug it into a model that you've created. That model predicts or comes up with an estimation of how it thinks Apple is going to perform over the next coming years based on the data that you gave it. So that's what a financial model is. There's lots of different types of financial models, but essentially that's what they're doing. They're creating these financial models to help determine the value of companies so that other companies can either merge or acquire them, or these companies can go public for various reasons. And that's essentially what financial modeling is all about. Using Microsoft Excel to create models or systems or algorithms to predict the future value of companies using their past performance and metrics and data. That data and those metrics are things like, how much are they spending each year? How much are they spending on employees? What are they investing in? Research and development, capital expenditure, using data from the balance sheet, the cash flow statement, how much money have they got in reserves, what are their future plans, so on and so forth. Alright, so 9 to 12, this is a very busy time for analysts. Hey, quick little interruption. So the guide that you're reading right now, or that I'm going through, is the guide that I wish existed when I was in your shoes trying to break into the industry. I've put together guides on investment banking, asset management, sales and trading, and all the other divisions, because those are super useful and they will definitely speed up the time it takes for you to break into the industry. And each guide will probably take you less than 3 or 4 hours to read. Essentially, all the information that you need to break into the industry is available out there online on my YouTube channel, on various blogs, websites, etc. It's scattered all over the internet. What the guides do is bring all of that information into one place. So it makes it easier for you to just consume it in a few hours and get ahead of the hundreds of thousands of others in your shoes that don't have access to a resource that basically gives you everything you need to break into the industry. So if you want access to them, hit the first or second link in the video description below. They used to be £20 each, so you can get all 9 for 180 quid. However, you can get all 9 of them for 30 quid, but be quick because that's not going to last forever. With that, let's get back to the video. They're typically working on project related tasks and doing financial modeling, research, analysis, etc. 12 p.m. to 1 p.m. analysts would usually take a lunch break. Most people in banking across the industry tend to have their lunch at their desk. Sometimes if it's summer like now, it's sunny, they might go out, go for a walk. So that's that. 1 p.m. to 5 p.m. another chunk of deep focus, deep work time. This is where they might do client meetings, conduct due diligence. So due diligence is basically research. So conduct focused, detailed research on a company that they're looking at, and then doing other work on other project related tasks. Additionally, analysts might participate in internal training sessions or attend networking events. The investment banking division is quite intense and the hours are very long. So analysts are less likely to attend these training sessions if they don't need to. Whereas other divisions where you have a bit more leniency in your time and where it's not so high pressure and intense, like asset management, for example, you're more likely to be able to attend training sessions. 5 p.m. to 7 p.m. This is a common time for conference calls or meetings with international clients. So for example, 5 p.m. in London is like 12 or 1 p.m. in New York. So 5 to 7 is a time where most investment banks, you know, they have headquarters in America, for example. So this is a time where you do those international calls and meetings, etc. If you've got international clients, it makes sense to do it at their convenience versus your convenience. And then typically after 7 p.m, the office quietens down. Most of the senior people have gone or start leaving. And then from 7 p.m. to midnight, it's like a library environment where the analysts and associates can just put their head down, no distractions, no meetings, no people coming to their desk and distracting them, no getting up and going out for lunch, etc. It's just time to do deep, focused work and do the changes and work on the pitch books that they've been tasked to do and that are typically due tomorrow morning or tomorrow afternoon for someone senior to review. So yeah, also if they can squeeze it in, they might do gym. The day ends around midnight, 1 a.m. and you would get a cab, like the firm will sort you a taxi out, you get a taxi home, sleep, and then back at it in the morning. That's a day in the life of an analyst. Now let's do a day in the life of an associate. Day in the life of an associate is fairly similar. Get in the office 8, 9 a.m. I won't run through each step. You can read it in your own time. But the key difference between an associate and an analyst is that the associate gets more client exposure. So they go to a lot more meetings. They see a lot more clients face to face. And they have more responsibility. So associates are kind of more responsible for the financial models that get created and used by the senior professionals and in client meetings and in pitch books. And the analyst role is to make sure they put it together. The associate checks it basically. After the associate, there's a senior check as well. There's vice president, but associates get a lot more responsibility. So typical day to day is pretty similar to the analysts, except there's a bit more client exposure. They finish a bit earlier. So respond to emails, prepare the work for the next day's meetings and deadlines. And they're basically responsible for managing the analysts that they work with. A day in the life of a vice president. So when you get to VP level, you know, you're still getting in the office, not late, like at an early time. And your meetings are going to be with senior management. So directors and managing directors. and you're not working on the financial models per se, like the analysts and associates. You're going to be reviewing the financial models. You're going to be reviewing the presentations. So the analysts and the associates are going to put together a pitch book, a presentation on Microsoft PowerPoint that is going to be used in a client meeting. Now that presentation might say, this is the reason why you should go public, or this is the benefits, these are the benefits, pros and cons of going public, i.e. selling your company's shares to the general public. Or the meeting might be for a merger or an acquisition. These are the pros and cons of doing this merger with this company. Or these are the pros and cons of doing this acquisition. It will give you access to this industry, a growing company. You don't have a product in this space, so it makes sense to acquire this company, blah, blah, blah. So you need something to present to the client, right? Analysts and associates work on that presentation. You as the VP, you're going to look at it and say, let's take this out. Let's change this slide. Let's move this slide to this. Let's move this page to this side, this page, blah, blah, blah. Do this, do that. Take out this data, put in this graph, etc., etc. So you're reviewing a lot of the material, and you're strategizing about new business opportunities. So you're going to be talking with directors, MDs, etc. And also it's your responsibility to be out there in the industry, networking, trying to find potential business. Because look, as an investment banker, business isn't just going to fall on your lap. You need to go out there and start building relationships with clients, networking, go to networking events, especially that are relevant to the industry you're focused on. So if you're a healthcare investment banker, you want to go to the relevant healthcare industries where startups, scale-ups, companies, incumbent firms in the industry are. So you can start rubbing shoulders with the right people in those industries. And then when they need an investment banker, when they want to go public with their company, when they want to acquire a smaller player, when they're having trouble, when they need restructuring, they shout out to you, or they think about you. So then you can bring in business. You do that, you make the firm a lot of money, because investment banking, you take a commission, right? You take a fee on the transaction. You take a commission from each transaction, or you're giving advice, right? It's advisory services. So you charge them for that. That's how you make money. If you're charging on a multi-billion-pound deal, the firm gets a cut of that, right? And because you brought it through, you get a nice bonus on top of that. So it's in your interest. If you want to climb up the ladder in investment banking, you need to be out there, putting yourself out there and building relationships, because that's how you bring in new business. Afternoons would be filled with meetings, calls, finalizing pitch books, more reviewing financial models, and just basically working with the analysts and associates to coordinate timelines and deadlines, making sure any projects that are going on, that everything is going to be done ahead of time, so everything runs smoothly. And then you might go to networking events, go and wine and dine clients, business dinners, etc. Social activities, go to golf, go to cricket, whatever it might be, in order to just keep your clients happy. And then go home 8 to 10, probably check emails. Back in the day it used to be on Blackberries, lol, but now obviously everyone's on smartphones. Check emails and then wind down for the day, and then start all over again the next morning. So differences between analysts and associates versus VPs and more senior people. You are managing more client relationships. You're responsible for prospecting and bringing in new business, because your pay is a lot more of your pay is determined by results now, rather than just doing the work. You lead transaction execution. So you make sure deals get cross the line, get closer to their deadline and cross it successfully. And you're keeping up with market trends, so on and so forth. Business development and strategy is also important. It's your job to kind of find out, all right, where are the opportunities in the space? How can I be entrepreneurial and come up with a strategy that's going to make our division or our business unit money? And you kind of develop that business. So it's quite entrepreneurial. And that's why a lot of investment bankers leave the industry and they go and do their own thing. They start a startup, they start a scale up, they go and work in fintech, whatever it is. So yeah, next level up from VP is director. Goldman's, for example, they have vice president and executive director, same thing. But other firms split them up. They have VPs, directors, managing directors. All right, you can get in a bit later. You're quite senior now. You're making lots of bread. You're probably on like, what, 400k a year plus bonus. Your bonus can be anywhere from 1, 2, 3, 4, 5 times your salary. Directors may have a meeting with clients to discuss progress of a current deal, to pitch new business. So a lot of what I just said with vice presidents, the directors do all of that even more. So they're doing more client meetings. They're responsible for bringing in business, and they're responsible for making sure the vice presidents, associates, and analysts are all doing their jobs. They will be reviewing ongoing deals and ensuring their accuracy and completeness. Afternoons may attend a meeting with other members of the bank's senior management team to discuss the bank's overall strategy and to provide updates on current deals and potential new business. So the directors are going to be reporting to the managing directors, who are the most senior people on the floor. And once again, a similar story. The more senior you get, you're doing more client dinners, you're doing more strategy. Like, the senior you get, the more your decisions have responsibility. Like, the more impact your decisions have on the bottom line of the division or that team. The more junior you are, the more grunt work you're doing, the less impact you have in terms of bringing in business and making money for the firm. Directors tend to leave the office anywhere from 6 to 9 p.m. But when they get home, they're probably on their emails. And yeah, it's a pretty similar story. They're doing less of the modeling, more reviewing and managing, basically. Managing at the director and managing director level, a lot of your role is managing teams and business development. So setting strategy and identifying new business opportunities. A managing director in investment banking typically has a varied and high-pressure role with responsibilities that range from managing the bank's overall strategy and overseeing a team of directors and other bankers. Managing directors typically wake up early, go to the gym, come in the office, do the morning meetings, do calls with clients to discuss potential deals or transactions. After that, they meet with their team of directors to discuss what's the progress, what's the latest on the different deals that our team is working on. They review financial models. They assign tasks. So they would set the directors and the VPs various tasks, and then they go and do those tasks and make sure the associates and analysts get those done. Lunch, 12 p.m., eat at the desk or go for a client meeting. And then they spend the afternoon in meetings with other directors, analysts, associates to review presentations. So this is where all seniority levels come together and review presentations. They all take notes and see what needs to be done. They chip in with their ideas. This could be made better. We could do this. We could improve this. We should come at the meeting with this angle. They all collaborate and work together. And then they go, typically it's the managing director and director going to these meetings to do the actual pitch. So the main big meetings where it's a proper pitch, that's going to be the big guns, the senior professionals, the ones who have the knowledge and the industry experience. And then everyone below them is responsible for working together and making that presentation look pristine and have everything it needs. As the day winds down, the managing director might have a final call or meeting with clients to discuss progress on the deal. So as you can see, there's a lot, like in this industry, there's a lot, the more senior you get, there's a lot of staying in touch with your clients. There's a lot of calls, a lot of meetings. And it constantly, imagine like let's say you watching this, you're a client and I'm serving you. Yeah, I basically have to be there for you any time of day that you need me. And if you're responsible for, $1 billion company, I am going to be there as often as possible to give you assurance and to make you aware that everything that we're doing on our end is going good. Everything, you can chill out. Everything's in control. I want to make you happy. And the reason I'm doing that is essentially, one, I want to win business from you. I want you to be my client and my firm's client because it's good for business, it's good for the firm, but also we make money. And if I make money off of this deal, I get a big bonus. So there's incentives all around the place. And the hope that there's repeat business. If I do something with you, you might work with us again, or you might enjoy this experience so much that you refer me to your other entrepreneur friends or other corporate company friends, etc. So that means more business means more deals means more bonuses for me. So that's how the investment banker thinks. MDs typically leave at 5, 6 p.m. and they go to their big houses and they chill out, read emails, and then get an early night probably, and then wake up the next day and do it all again. These are some of the positives of the career. High salaries and bonuses, intellectually challenging. So work on lots of every deal is different. Every client is different. So you have to figure out and solve different problems. And So every day is going to be different. It's not like you rock up and you're doing some boring thing day in, day out, and then that's it. As you climb, the learning curve gets steeper and you learn new things and you get exposed to different things. So it's intellectually challenging. You get to network with industry professionals, but also leaders in different industries who are building businesses. It's prestigious, it's a very competitive and sought after career, and it's a very fast paced environment. Like, things are moving quickly. You got to stay on the pulse, and things that you work on, you'll see it on the front page of the Financial Times. So people like that. Negatives, we can cover that next time. Long hours, high pressure, limited creativity, high turnover, people get fired a lot, lack of diversity. There's lots more going on in this guide, which you can check out. It's linked in the first link in the video description. But yeah, hopefully you enjoyed that. If you did, let me know in the comments below, and I will see you in the next one. Peace.